Hi, thanks for tuning in. Had some time today, so I thought I'd do some analysis and put it online. I'll try to do this more often come the new year, and I think I'll stick to mostly bar by bar analysis for a while, unless some principle comes up that I want to show in more detail. When I was learning to analyse charts in the way I do, I learned a lot using bar by bar analysis. It really helped me understand. I'll try to keep them to a reasonably short time. Okay, this is the chart we're going to look at today. It's a weekly chart, and you can clearly see the market's been trending higher at this point. This is a futures chart of wheat. I didn't choose it for any particular reason other than there's a principle that comes up almost immediately and we can watch the response to it. I haven't really looked at it too much in detail, but I do know what's coming up pretty quickly, and we'll get there now. So the first bar we see is a widespread up bar on high volume, and you can see there's a very high tail closes down here. So supply's been drawn out up here as prices traded above that level. So you've had supply being drawn out. Now, it's traded as an up bar despite the supply being drawn out and the very high volume. So while there was supply being drawn out, it was still relatively positive. It closed higher. Here's the previous close, and it still closed higher up here. If all that volume was selling, it would have closed lower for sure, but it didn't. It still closed as an up bar. So while there was supply drawn out, you do need to realise that the market was still stronger than weaker. It's just that supply was drawn out. Normally you would see a tetra supply in response, or if the buyers were comfortably able to absorb the sellers in this case, the market may just continue higher. And this would be when I say it's an absorption bar. The buyers have absorbed the selling from the sellers. So all you can do is wait to see what the response is and understand the response, and it will tell you what happened on this bar. So the next bar is an extremely widespread up bar. The close was right at the high, volume increased, and you can see that the buyers did comfortably absorb the sellers in that bar. Price has gapped up, which is always a way that the professionals use to encourage people to continue holding. Now, this is obviously an excessively wide bar, and almost certainly the market will attempt to consolidate in response. Whenever a market accelerates higher in a relatively short period of time, supply will be drawn out. Supply will come from the left, which is previous trading to the left, but there's none in this case. It will be profit taking, people who bought down here, taking profits up here, and it'll be shorting, people realising that the market's overbought, at least in the near term, and they set short positions up here, expecting price to pull back at least to some degree. So whenever markets make a lot of ground in a very short period of time, the market needs to spend some time, generally pretty quickly, in consolidation mode. And that's where the market will absorb supply that's coming from the sellers, coming from the left, coming from profit takers, coming from shorting. And if that's successful in the end, the market will then, after a period of consolidation, continue higher. If the selling becomes overwhelming, it's persistent, ongoing, overwhelming, eventually the market will move lower and lower and break down in response. So you can watch to see what happens in response to a bar like this when a market moves considerably higher in a relatively short period of time, and you can gain a judgment as to how strong or weak the underlying market is. Now, just to explain that a bit more quickly, if you take from here to here as the move that we're looking at, that's the move. If this is the 50% level here, just roughly, if the market consolidates in the top 50% of the range, then the market is relatively strong. And the higher up it consolidates, the stronger it is. If it's in the top quarter, it's even stronger. The underlying sentiment is even stronger. But if the market requires a deeper pullback and generally a more sustained pullback before it can consolidate, right down here, say, then it's a little weaker than what we previously looked at. And if the market has to come all the way down to the lows of the range before it can consolidate, then it's not as strong as it may have appeared when it accelerated higher. So the market is definitely showing you how strong or weak the underlying sentiment is, depending on how high in the range the market can consolidate. And sometimes it can't consolidate at all and it breaks down. This turns out to be a big upthrust, perhaps over 2 bars. Okay, next bar. Now you can see that price attempted to move higher here, and that would have been the momentum in the market. This bar and this bar have generated some momentum, and the market attempted to move higher, but higher prices weren't being supported at that point in time. And in response, the sellers came in, the sellers we just talked about. From the left, there is none, profit takers and shorting. And the sellers came in and they've pushed the market down, and it closed down near its lows, not at the lows. Volume was still above average, so pretty strong volume. And the bar, this bar, most current bar, closed comfortably within the range of this up bar. So all's not lost. It's a period of consolidation taking place. If it's successful, the price gains will be solidified, be confirmed. If it fails, price will break down. You've just got a period of consolidation. All you can do is follow it. And the close was pretty close to the 50% level at this point. Next bar is a much narrower spread. It's a slight down bar, but it's traded inside the range of the previous bar. There's the previous bar's range from there to there. It's easily traded within its range, and the close is within its range. Whenever a bar breaks below, and particularly if it closes below the previous bar's low, then it's a little weaker. It's not bearish, it's a little negative. And for this market to close within that bar's range suggests the market is making a decent attempt to consolidate, and price still remains about the 50% level of the push higher, perhaps a fraction below it, but not much. We're not talking the exact, we're talking a roundabout. Next bar is an up bar. Price closed higher. Now price remained within the range of this bar, and it traded a fraction above the previous bar's high, which is a slight positive. The market attempted to move higher. It did, however, close in the middle, and that suggests that some selling was still present, but it wasn't overwhelming, and that can be seen by the fact that volume continues to reduce, and it was well below average this time. So the market is doing a good job to consolidate at this point. Now the next bar is down. So in some respects, the sellers gained the upper hand. Prices closed below all the recent lows, and particularly below that bar's close. So that's a little bit of a negative. Volume increased slightly, but remains below average overall. So at this point, you wouldn't say it's particularly serious, but it's a concern that the market was able to break below these bars' lows. Next bar is an up bar. Price closed higher and it's back within the range set by these lows. So it's back above. And this looks a little bit like a little mini shakeout over 2 bars. Price would need to close above this level to be successful. So it's potential 2 bar reversal or shakeout, but to be complete, it would need to close above where price broke down from, which is this juncture here. So it's an attempt to challenge any sellers to come out. Prices dipped lower with a bit of violence, and then it sprung straight back the next day because it wasn't really weak. It was an attempt to flush out any more supply. And the market needs to get rid of any sellers, because if it tries to go higher again and those sellers emerge, then that's just going to thwart the price moving higher. They're going to sell as profit comes back, or they make more profit. So the market, while it's in this consolidation phase, wants to flush out as much supply as it can from this level. And that'll make it easier for price to move higher in the future. Next bar is a narrow spread up bar. Spread has reduced, perhaps the narrowest spread since back here prior to price accelerating higher. So that's not particularly strong. Volume increased. So if the market was really strong, you would expect that spread to be much wider on an increase in volume, at least as wide as this bar and probably a little wider. So you would have expected the spread to be more about that wide, but it wasn't. And that's because sellers were still present. As price attempted to go higher, the sellers came in, enough sellers, to stop price continuing higher. And you can see the slight close off the bar's high, which also suggests that some supply was being drawn out. Next bar is a relatively narrow spread down bar. You can see price made a little attempt to go higher. It probably wasn't being supported. The volume down here was low, so that suggests that the attempt to push higher wasn't broadly supported by the market in general, and instead prices pulled back, probably because it's identified that selling was present in this bar, so it's going to come back and try to flush out those sellers. Next bar, narrow spread down bar. Spread reduced even further, volume reduced even further. There was a tiny attempt for price to move higher, but it didn't really seriously try to go higher at all. This was an awkward looking test for supply, and the low close suggests that there is still an intent to flush out any sellers in the market. Next bar is a fairly narrow spread up bar. Spreads increased a little, but it was very narrow here. So spreads increased a little. You can see price did dip below the previous bar's low, but then it recovered comfortably to close up near its high for the day on a modest increase in volume, but still well below average overall. So this was a bit of a nothing bar, really. The market just flipped higher because selling pressure eased at least somewhat. That allowed price to float higher on relatively low volume. There was no intent to push it higher, and there was no intent to push it lower to threaten any sellers. So price just floated up on relatively low volume. Next bar is a increased spread up bar on the same volume as previous. So price has moved up, and it's the highest close since this bar. So that's a positive for this market, and price moved up with relatively low volume. So it moved up with ease. That means that selling pressure wasn't present, and that's what allowed it to move higher, the lack of selling pressure in the market. Because it's still below average volume, it certainly wasn't being pushed hard to move up there. It floated up there because there was very little selling in the market. And you can see price did trade slightly below the previous bars closed, on a daily chart, that would have been a test for supply. And then prices moved up in response, or floated up in response. Next bar is a bit of an upthrusty looking bar. Price attempted to continue higher. Volume has increased to average. So this is more like proper trading, genuine trading. All this fluffy stuff on low volume doesn't often mean a great deal apart from lack of demand or lack of supply on that particular bar for that particular period. This time it was average volume, so it's more genuine, and prices attempted to go higher and closed poorly. This is supply being drawn out. So there is still supply present within this range. And if supply is present, it generally means the market will come back and challenge the sellers. Rarely can a market continue higher when supply is present, when supply is being drawn out. So nearly always when supply is drawn out, the market will come back, challenge the sellers, attempt to absorb their supply, their selling. If it's unsuccessful, the market will break down. If it is successful, the market will consolidate and then push higher, and push higher without those sellers in the market anymore. That will allow the market to move higher with relative ease. Okay, next bar. Market came back, as you would expect. And I also should say, just on that, that if you get supply being drawn out, like on this bar, but price just continues higher and rams itself up, generally it'll be unsustainable, and generally it'll be so that sellers can set up shorts and knock the price back down pretty quickly afterwards. It's generally unsustainable. So if you get supply being drawn out and the market doesn't come back and attempt to challenge them and remove them, then you should sit up and take notice, because it generally means the market's being taken up to fail deliberately. Okay. We've got a down bar. It's only a modest down bar. It's a test for supply. Funny little tail on top. There was a little bit of an attempt to push higher, but overall, the part we're interested in is the challenge to the sellers. When price moved lower, volume was below average, so not much supply was drawn out. That probably allowed price to pop up, but it did close back in the middle. So it wasn't a great test for supply, but there would have been some testing for supply in there, and it appears that selling pressure wasn't present, at least on that bar, for that bar's period of time, which is 1 week. Next bar. It's an increased spread down bar, and importantly, it's closed below these bars' lows here, just slightly. So it's challenging those lows, because you've had the lows come through here and come through there. It's average volume, increased spread, supply was being drawn out on this bar. So for whatever reason, there wasn't much supply on this bar. There was on this bar, but it's come back this time. So there is still supply being drawn out. Supply is present in the market, and that's always a concern. Now the next bar is a narrow spread up bar on really quite high volume. Now just think about that. What's that telling you? Volume is well above average, the highest volume since this bar, and this bar obviously. And it's a narrow spread closed in the middle in response to a push lower. What's it telling you? It's telling you that supply is being drawn out. Pretty strong supply is being drawn out. That's selling pressure. If all that volume was buying, because the bar is an up bar, then spread would have been much wider in response. But it wasn't all buying. It must have been selling, and that's what's kept the spread relatively narrow. As price attempted to push higher, the sellers were knocking it down, selling into the demand, and that's what kept the spread narrow, and that's what caused the mid-bar close in the end. So supply's been drawn out. You've had supply on this bar, supply on this bar, and now obvious supply on this bar and above average. So weakness is emerging. You've got a narrow spread down bar on reduced volume. When you see stuff like this, you have to be suspicious. You've had supply, no supply, 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 reduced supply. The period of consolidation is slowly failing. It was looking pretty good through here, and now you've had supply, not much supply, 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 and reduced supply. It was still slightly above average, and it was a down bar, but it was a relatively narrow spread. That bar probably could have broken down if that was the desire, but it wasn't the time for whatever reason. Next bar. Next bar is a breakdown bar. Now, let's just quickly look at this. When you're drawing your lines, you would initially have drawn your line there, but then you got this attempt to reverse, which really never completed in reasonable time. It did over here, but then immediately supply was drawn out. When I say completed, it had to trade, price had to trade above this bar's high and this bar's close, that little juncture there, for this reversal to complete and be considered a chance at success. You can see the market pushed up to it on this bar, but it closed right at that level. And that's a good sign because it shows you that your level is correct because the market's closed there, pushed back below it, got a bit of a run up, pushed through, and it's pushed through and immediately drawn out supply. So that was a bad sign. Even though the market was attempting at this point, to consolidate and do a reasonable job at it, supply drew out pretty quick once the consolidation appeared to be becoming successful. Now, let's just move back again. So you would have initially drawn your lines here. I always consider the most recent trading to be more powerful than the previous trading. So here you had a chance to put a line as well, but it was really only a little 2-bar reversal when price pushed straight back above this level. So that sort of reduces its importance to some extent because price has recovered. Then you had a pullback here to this bar and this bar. So somewhere in there you could have a line for sure, and that would probably override that line to some extent. And now, most recently, you've had that level there. Here is a little up bar in response. This bar respected that low, and this was your breakdown bar. And it's on slightly above average volume, so that's genuine trading. If that was on very low volume or below average volume, it wouldn't be so threatening, but it's on average volume. And if it was on really, really high volume, if it was on high volume like, say, this or this, then you would be suspicious that there's hidden buying in there and you'll get a reversal next bar. But this was average volume, just a fraction above average, and that's nearly always telling you it was genuine traded volume. And what happened genuinely on that? Supply was drawn out. It pushed price down and it closed near its low. That was a breakdown bar. That's pretty much what it was, a breakdown bar. And this level here will be hard to recover back above now. If the market is able to, it will need an increased effort to break and close back above this line here. This is your breakdown line, this is your breakdown bar, and that's going to be a strong level. And the longer it goes on, the stronger it'll become. Price continued lower. We might just speed up quickly because I'm going longer than I intended. But here was your breakdown line, here was your breakdown bar, and confirming the breakdown bar was further downside follow through in response. There was a brief attempt to close higher, just there. It obviously was overwhelmed by supply. You can see volume increased slightly, but it was only just a bit above average. It was genuine trading again, nothing suspicious about that, and the close was low. This is a breakdown. Now over here, here's your push higher from here up. There's another juncture there to take notice of. right at the 800 level here. That's going to be an important level in the future, because when price moves back below that, then all of this has been wiped out, and this will then become another strong level of resistance if it's broken. If the market respects that level and remains above it, it's still some chance to push higher at some point. But a break below this level would be damaging for the market, and the market would probably find it really hard to recover and would probably start some sort of downtrend. Okay, next bar. An attempt to support the market. You can see price dipped below the previous bar's close and has pushed higher in response. Selling pressure eased somewhat here. It's an up bar. It's not really a strong up bar. It would appear that selling pressure eased in that bar for whatever reason, and that's allowed the market just to float up on reduced volume. It wasn't a push higher. It was a lack of supply in the market that allowed a small amount of buying just to push the market a fraction higher. And you'll also note that this level here at 800 was respected. Price dipped below it and recovered back above it. So there is some strength in this level, despite the weakness emerging here at the breakdown line. And this would be more termed a minor breakdown line. This is a stronger level at the moment. This is the breakdown bar within the range being from here up to here, and in particular up to the highs of the up bar. Okay, we've had another down bar. Price has closed right at or just below fractionally the previous bar's low, and you can see that the market is threatening to break below this 800 level. It's closed a fraction below it, but not clearly below it. So you would give it the benefit of the doubt, at least on that bar, but it's flirting with that level and it's testing it for strength to see just how much strength remains in the market above this level. That bar was confirmed and reiterated here. Here's the level. Here's the challenge to that level. And the market attempted to move higher. It failed to remain up that level, meaning that there wasn't enough demand to sustain it there, and price has closed fractionally below the previous bar's close and clearly now below this little up bar's close. So it's definitely looking like it's going to challenge this level seriously, and if it really clearly breaks through it, it'll be very difficult for the market to recover back above this level, at least without some sort of decent effort or having enough time to pass for everyone who's holding positions from up here to sell out at a loss down here to stop the resistance at this level effectively. Next bar. Narrow spread up bar on reduced and below average volume. This was a weak up bar. A down bar with increased volume, but it did respect these bars' lows at the moment. So you wouldn't say the market has clearly broken down yet. It's still flirting with this level. The market knows there's some support going to be drawn out at this level. It's an important level, and it's just testing that support and seeing just how much there is and how long it will take to wear it out. Now, up bar on increased volume, well above average volume. This is supply being drawn out. Very similar to this bar when we said that supply was being drawn out. Strong selling pressure has emerged. You can see the high volume, narrow spread. There's the lows of the range. There's the important level. So right where the market was trying to recover back above this 800 level, supplies come out, kept the spread narrow, and the volume suggests that it was pretty serious. What do you think's going to happen? Oh, I thought the price might have broken down seriously there, but it didn't. It's down, and prices closed below all these lows. Well, only just. It's definitely tested those levels, and prices pulled back from this 800 level again. So it's certainly not looking strong. It didn't break down as I expected. I thought you might have got a bar like that. Another up bar, increased volume, it's narrow spread, back at the 800, and volume increased to average, so it was genuine trading, I always say, when it's average or just a fraction above. And you'd have to say that supply was being drawn out there again. And you can see that the market is sort of trending lower now, like this. It's like bearish absorption. You know, when I go on about bullish absorption, like this, then you've got bearish absorption, which would be a pressing nature to the downside. Clusters of closes at a similar level. You see here and even there. And threatening up bars, which suggests prices are going to continue higher, but each time in response there's a down bar. So let's see what we get this time. So we'll call that bearish absorption. Next bar is another weak up bar. You can see the close well off the high. Volume did reduce, but price was trying to go higher. That suggests there was no demand for the upside here. There was no buyers trying to push it higher at all. This was a weak up bar. This was a no demand up bar, and it's a bit up thrusty with the poor close, or close just below mid bar. The market had a chance to recover at least somewhat, and it didn't do it. Here's your 800 level, and you can see that price could have moved above it. There wasn't enough buyers in the market to do so. That allowed price to float lower in the end, or drift lower in the end, and close back at the 800 level. Another up bar, but this time with an increased spread, price is back above the 800. Volume was below average. This suggests the market has floated higher on low volume. A market won't recover and move higher on reducing volumes. See how the volumes are reducing there? The only reason price can go higher on reducing volumes is if selling pressure is low. And we know there's supply in the market. So this is like an unsustainable push higher, or at least I would expect it will be. Another weak bar. Volume was increased slightly, but still below average. You can see that there was some testing for supply in the bottom of that bar there, but it hasn't really pushed higher with any sort of serious intent. But price is back above the 800, which is it's a positive for sure. I'm keeping on going because I want to see what happens here at the 800 level. You can see price tested for supply again below the previous bar's close. It did push higher, but it did close off its high on an increase in volume. So supply was drawn out again. It's a bit of a push me pull you at the moment. I would expect that the market's just waiting for the conditions to be right for some sort of breakdown bar. But that remains to be seen. The market has recovered and it is above 800, and you have to give it the benefit of the doubt too. Another modest up bar. There was once again some testing for supply below the previous bar's close. That would have been on a daily basis, and then prices pushed up in response. That's not a bad looking bar. That's the best bar we've seen. So the buyers have gained a little bit here. We've got a down bar, but the market's traded within the previous bar's range all week as an inside bar, and you would expect that would have lower volume, and it did have. Because prices traded through that range the previous week, there won't be as many buyers and sellers within that range anymore because they did their work the week before. So this time when price pulls back through the range that's previously been covered on the previous bar here, then you will always expect that trading will be reduced. And it was. Now the sellers are starting to come out. You've got a high tail on this bar. There was an attempt to push higher on the previous close there, and that met supply by the looks because volume increased to a fraction above average. So it was genuine trading. The market's closed below the previous bar's close, but if you look, it pretty much traded within the range of this bar. So no serious weakness yet. There's a bit of buying and selling going on within that bar's range, and the outcome is not been determined yet. The buyers did emerge on this bar, and the sellers have emerged on this bar, but it's a bit of a balance at the moment, although the close is at the lows of the range and is probably a bit threatening there. An attempt to test the market for supply. Here's the lows of the range we've been looking at. Here's the highs. And this is like a little test for supply bar, and not much supply was drawn out. So if this market is going to break down, the timing's not right. There's not a favourable time. Sometimes the markets need to move sideways like this because the trading conditions aren't favourable for what's at hand, whether that be a push higher or a push lower. And at this point, trading conditions aren't benefiting either side, so the market's going sideways. There was a threatening down bar here, but a test for supply here. So there's still a balance between the buyers and the sellers. Very narrow spread down bar. Price is trending lower here, but not seriously. Spreads are narrowing. Volume was below average and even lower than the previous bar. This is a bit of a nothing bar. The only difference was the market has traded below that bar's range now for the first time in 4 bars. So if the sellers are gaining the upper hand, it's only slightly. I would still say that's probably just trading sideways. It's a weak up bar. It's got a high tail. Volume is relatively high. Price has attempted to go higher, and it's been knocked down by selling pressure to close in the lower half of the bar on high volume. Increased, above average volume. Almost excessive, but there's no way you could say that that was buying support with a poor close like that. The fact that the market did close higher is a minor positive, but with what we've got previously, it's not like this bar where I said it's still a minor positive that the market closed higher. That's with an uptrend in the background. Now you've got a market who's been vulnerable. You've got a minor breakdown in the background and a market that's threatening to break below an important level. The context is different, but it did still close higher on high volume. You can give it a little bit of benefit of the doubt, but it's not the same situation as we saw here. The background is different, and that's important. Now price is threatening that 800 level again. There's the 800 level. The price just touched it and closed a fraction above it. So the market is definitely threatening to break down now. I have to say though, volume is quite high. It's increased over the previous bar's high volume, and it was a relatively narrow spread, a similar range or spread that the bar before it had. So some buying support has come in, some demand has come in. So there is still a defense happening at this 800 level, or at least an attempt to defend that level. So some buying did come in, and that's what's kept it narrow. It's almost a mirror image bar, right at the 800, slightly lower close. It's an inside bar, so you would expect that the volume would be reduced over the previous, and it was. It's a bit of a nothing bar, but price is still threatening that 800 level. Now price is flirting with the 800 level. It's not a clear break below it. It's a narrow spread break below it. Price has drifted below it on low volume. So it's not a serious breakdown bar. You've had confirmation of the break. Here was the bar that broke below 800, and it's been confirmed with a bar with increased spread and volume. It would appear that the buyers have just left at this point. The attempt to support the market isn't continuing, or at least doesn't appear to be. You've got the lows of the old range going through there, and this is what I would call last gasp support, and the market's broken fractionally below it and doesn't look like it even received any defense at all, so it's looking vulnerable. We've had another down bar, but it's not a particularly strong down bar. If anything, it's a weak down bar. Narrow spread, below average volume and reduced mid-bar close. This looks sort of like the buyers were trying to support the market because there was very little selling there. The up bar in response to the little bit of buying that did emerge there wasn't particularly strong. Volume was still below average, so it wasn't a strong buying period, and the spread was relatively narrow compared to the average spread right across the whole chart. You know, the spread's narrow. Another narrow spread up bar on low volume. We're coming back to the 800 level now. It's another narrow spread bar on reduced volume. Just look at the volumes there, continuing to reduce, continuing to reduce. That's not the sign of a market who's going to come back to a really important level and challenge it with any vigor. That's a weak response, and it's not going to be sustainable. You can't sustain an uptrend on reducing volumes like that. It just won't happen. It can go on while selling pressure is low, but as soon as any supply arrives, it'll get knocked down in a second. And a slight amount of increase in volume and price pulled back straight away. So there was some selling pressure in there, but it wasn't too serious. An attempt to support the market. There's some buying support come in there. Volumes increased to average. Spread was very narrow, but the market attempted to move lower, and some buying supports come in, and that's pushed it up a little bit. So you've still got a bit of push me, pull you going on around the 800. At some point, we'll get a clear breakdown bar like that. That's a clear breakdown bar. It generally has an increased spread. It breaks clearly below an important level, and it'll generally close low on an increase in volume. That's a nothing bar, sideways, inside bar, low volume. That's another test for supply. It's increased volume suggests that there was some selling pressure around, and it was forced to attempt to absorb it, which it's done at this point. An up bar to the 800 would suggest the buyers gained the upper hand there, at least for that period of time, and a down bar would suggest that there was selling pressure, and that was what increased the volume and forced the buyers to buy. Narrow spread up bar on higher volume, above average volume. This was a supply bar like this one and this one. The market continues to flirt with the 800 level. There was more buying in that bar than selling. Above average volume, narrow spread, didn't close very low at all despite there being high volume. There was more buying pressure in that than selling. but the sellers did gain the upper hand by the looks. And that might actually be a little minor breakdown there. If you draw the shelf through there and price has pushed through there, so that looked like it was more buying than selling, I would say that the sellers were absorbing the demand of the buyers. So it was an absorption bar in reverse to the way I would normally explain it. Normally it's the buyers absorbing the supply from the sellers. This was the sellers absorbing the demand from the buyers. So the demand that was coming in, like on this bar here, the sellers were absorbing the demand. They were just selling into it, absorbing their demand, keeping the spread narrow, and then we get a response lower. And see, by looking at the response, you can work out what happened previously, and that will then change your opinion. I originally thought there was buying support coming in on these two bars, and there was, but the buyers were being absorbed by the sellers, and the sellers gained the upper hand, and this looks like a little minor breakdown. Shelf through there, prices closed below it, and bordering on clearly below it, and volume wasn't low. Narrow spread down bar, that's like a test for supply, but it was a failed test for supply, which is a sign of weakness because the next bar was down in response. This was like a secondary test for supply. Price moved higher with a relatively narrow spread, and if you notice, the important thing at the moment here is if we mark that as a minor breakdown line, and this is the breakdown bar, this is the new level that the price needs to get back above, and it's probably going to struggle to do so. And the 800 line has probably gone now. There was an attempt by the market to consolidate and test a weak up bar, a down bar in response. That looks like a buying bar or an attempt to move higher, but that attempt was thwarted straight away and a push lower in response. There's the line there. Here's the next line. You've had a breakdown, an attempt to consolidate, and by the looks, another breakdown. It's an up bar, but it's not strong. A test for supply, or at least an attempt to test, and the weakness comes in again. An attempt to recover, but look how narrow the spread is. It doesn't look strong. There's a test for supply, so it's an attempt to recover. You can see that here, breakdown, here, breakdown. We're attempting to consolidate, just like happened through there. That's an up bar with a very narrow spread on high volume, supply being drawn out. Looks like the buyers are trying to gain the upper hand, so the buyers have absorbed the sellers there, and that's the response to the next bar. You've got another up bar, so we draw those levels in again to see where we are. So this level's been overcome, this level's being respected, price has pushed up to it, but it hasn't been able to push above it. If price gets above that level, there may be a recovery. There's a down bar straight away. So here was the important level. This was the secondary level. The market did attempt to recover, but it was knocked straight back down. If this level here now gets broken, you'll pretty much have a downtrend established. That's a negative influence on the market. Any attempt for the market to push higher will draw out supply and force it lower again. Because people get trapped in at these levels. People get trapped so that when the market comes up to those levels again, it allows these people that have been trapped in positions to get back out, and they sell and get themselves out of their positions. And that selling causes price to move lower. And price tries to move up, but that only attracts sellers again. And that then causes price to move lower because these people are getting themselves out of a bad position where they've been potentially trapped into a losing position. weak attempt to recover. That's a really weak up bar. That's an attempt to test for supply. That was the response to the test, which was positive, but it's closed well off its high. So supply's been drawn out on an increase in volume. Another supply bar where you can see the market's coming up to this level that we said was going to be difficult, and it failed here, failed there, and moved lower. Now it's trying to recover, and both times enough supply has been drawn out to knock price down, close off its high here, and close near its low there. There's a down bar in response, a weak attempt to recover, a test for supply, secondary test for supply, and prices trending through that level, this level here. No clear breakdown bar, but an attempt to push below that. There's a weak attempt to support the market. Test for supply in the bottom and a little response higher. Secondary test for supply as an inside bar within that bar's range. A push lower, and if you look, prices moved just below that level there where the market was attempting to support. Weak up bar on an increased volume, above average volume, narrow spread, supply is being drawn out. Test for supply that closed slightly as an up bar. Weak up bar, closed in the middle, narrow spread, almost average volume. Supply continues to be drawn out by the looks, and it's at that 600 level where we drew that line there. So there was the level there, prices coming up to this 600 level. It's probably going to find it difficult to break through it. Test for supply, secondary test, up thrusty bar, narrow spread, high volume, supply is being drawn out again at the 600 level. Down bar in response, so the sellers have control, or they likely do. Test for supply, attempt to test, you can see the attempt trading below the previous bar's close and the push higher on an increase in volume. And there you've got an up bar, but look how low the volume was. That must have been Christmas or something. Well, 5th of December, it's not Christmas. Oh, that's where we're up to. Oh, that's yesterday. Or this week. That's this week. Okay, I understand. Didn't realise that. Didn't realise we're that far into it. So that's this week's bar. Volume's only a couple of days in so far. So it definitely looks vulnerable. It's attempting to recover that 600 level. So just quickly to recap, really quickly, here was the original push higher, attempt to consolidate, minor breakdown bar. Here's the lows of the range, which, if broken, suggested that the sellers were in control. Following this, this is effectively a blow-off top. If you look at traditional technical analysis, this would probably be what they would call a blow-off top, and that's how it's actually reacted in the end. When this line was eventually broken relatively clearly, it showed an inability to recover. Then you had a minor breakdown here. I carry that line through. Any attempt to recover above it has failed so far. The price has pushed back down to this level, and it's threatening to break below it. Although just in the last week or so, selling pressure appears to have eased here, and some buying support came in last week, and that's being reflected in this week's up bar. So have to wait and see how that actually turns out in the end. But there's an attempt to recover this 600 level, but we're unsure whether it'll be successful or not, at least at this point in time. Okay, thanks for your time. Went way longer than I intended, but whatever. Thank you. See ya.